If your strategy is profitable backtesting, why aren't you profitable trading it live? Most traders will answer that question by rebuilding their strategy, tweaking the indicators, adding a filter, trying a new pair. They're solving the wrong problem. In this video, I'm going to show you the real gap, the one between a strategy that actually works and a strategy you actually execute, and exactly how our funded traders at TraderScale close it. I'm Alex, the social media director here at TraderScale. This video is about execution, the difference between the strategy you build in a spreadsheet and the strategy you actually trade when your own funded account is on the line. Here's what a backtest actually measures. Does this strategy work on paper with perfect discipline and zero emotion? Applied consistently over hundreds of trades. Here's what live testing actually tests. Can you execute that exact strategy the exact same way every single time? Even when your last 3 trades lost. Even when you're tired, even when your setup looks almost right instead of exactly right. Those are 2 completely different skills. A backtest never hesitates on entry. A backtest never moves a stop loss because it feels too tight. A backtest never skips a valid setup because the last one lost. You can, and most traders do, without even realizing it's happening. Trade after trade in small ways that quietly separate the strategy on paper from the strategy in the account. This is why a generally profitable strategy can still lose money in live conditions. The strategy was never the weak link, the execution of it was. Let me show you the 3 specific ways this gap shows up. Watch for these in your own trading. Entry hesitation. The setup meets every one of your criteria, but live with real money on the line, you wait, just to confirm it a bit more. By the time you enter, price has already moved, your risk reward has changed, and it's no longer the trade you backtested. Size drift. Your backtest used a fixed 1% on every trade. Live, you start sizing up on the setups that feel stronger, and sizing down on the ones that you're less sure about. The moment your position size becomes a feeling instead of a fixed rule, you're no longer trading your tested strategy. You're trading on your own confidence level. Exit deviation. Your backtested exit rule says you close at the target or close at the stop. No exceptions. Live, you take profit early because you're scared of giving it back. Or you hold past your stop because you're hoping for a reversal. Either one, you've quietly rewritten your strategy mid-trade. Individually, each of these feels small. A few seconds of hesitation, a slightly bigger size, a slightly early exit, but run those small deviations across hundreds of trades. And the strategy your account experienced is not the strategy that you backtested. It's a different strategy entirely and one that you've never actually tested. Here's what our most consistent traders at TraderScale do to close this gap. 3 practical steps. Step 1. Build an execution log, separate from your P&L. For every trade, record one simple thing. Did I follow my entry, size, and exit rules exactly as written? Yes or no. Not how much you made or lost, just whether you executed the plan. Step 2. Score your execution weekly, separately from your results. You can have a losing week with 100% execution. That's a good week because the process was clean and the market simply didn't cooperate. You can have a winning week with poor execution, and that's a warning sign because you got paid for taking a risk your plan didn't sanction. Step 3. When you catch a deviation, don't just note it. Name the exact moment. Was it the second you saw the entry? The moment the price moved against you? Write down what you were thinking in that exact second. Over a few weeks, a pattern will emerge. Most traders find their deviations cluster around one specific moment in the trade, not randomly across all of them. Once you know exactly where your execution breaks down, you can build a rule specifically for that moment. Not a vague be more disciplined, but a concrete trigger, like a checklist you physically read before every entry. Here's the uncomfortable truth. Most traders who think they need a new strategy actually just need better execution of the one they already have. Switching strategies every time live results disappoint you is a trap because you never find out whether the strategy failed or whether you failed to execute it. You just start the same cycle again with a new set of rules, and the same execution gap follows you into the next strategy as well. The traders at TraderScale who build consistent funded incomes aren't the ones with the most sophisticated strategies. They're the ones who found a strategy with a genuine edge and then did the unglamorous work of closing the gap between the plan and the execution, trade after trade until the 2 matched. That's the real skill, not finding a strategy, becoming the trader who can actually execute one. If you want the framework for what to do before you even open the charts, we've got a full video on the pre-session routine right here on this channel that pairs directly with what you just learned. Subscribe for more on trading psychology, execution, and funded trader strategy every week. Drop in the comments which of the 3, entry hesitation, size drift, or exit deviation, you catch yourself doing most. I read every single one.